Have you ever felt like the crypto market moves just before you take a trade? Like someone already knew what was going to happen? Well, that someone isn't magic, it's usually institutions or smart money, the big players who move millions of dollars and control liquidity behind the scenes. In this video, I'm going to show you a system built in Python that tries to spot those big players in real time. It's called the Institutional Liquidity Analyzer, and it's designed to find where the big money is hiding, where it's getting in, and where it might be preparing to move next. This tool doesn't just look at charts, it looks beneath the charts inside the order book where true buying and selling pressure lives. Let's break it all down step by step. Part 1. Getting the data. The eyes of the system. Everything starts with data. We use a library called CCXT, which connects directly to exchanges like KuCoin. Think of it like giving our program eyes to watch what's happening in the market in real time. We pull in two main types of data. Candlestick data, the price highs, lows, opens, closes, and volumes for each time period. Order book data, this is like the waiting list of all buy and sell orders. Now, this second part, the order book, is where the real gold lies. It tells us how much people are willing to buy or sell at each price. When a single price level has huge buy or sell amounts compared to others, that's called an order wall. It's often placed there by big traders, market makers, or institutions, and it can literally stop or reverse the market. So, our analyzer scans the order book and finds the largest order walls, the ones strong enough to affect price movement. Part 2. Liquidity analysis. Where is the big money sitting? Next, the system calculates something called liquidity metrics. Let's make that simple. Liquidity is just how easily something can be bought or sold. If the market has lots of buy and sell orders, it's like a smooth river. Price can move easily. But if there are gaps, no buyers or sellers, price can jump suddenly like a waterfall. So our tool measures how deep that river is. It checks how much money is sitting on the buy side versus the sell side. It finds if the market is more bullish, buyers are stronger, or bearish, sellers are stronger. It measures volatility, how wild or calm the price movement is. All of this helps us understand if institutions are accumulating, slowly buying, or distributing, quietly selling. Part 3. Market flow. Who's controlling the game? Now we move to something really cool, market flow dynamics. Every trade in the market happens because one person is buying while another is selling. But what's important is who is chasing whom. If buyers are rushing in with aggressive market orders, smashing the buy button, that means bullish pressure. If sellers are the aggressive ones, hitting sell at any price, that's bearish pressure. The analyzer calculates this automatically by comparing price changes with volume patterns. This helps us know whether bulls or bears are currently in control, not just by looking at a chart, but by reading the flow of money itself. Part 4. Machine learning predictions. Teaching the bot to think. Now comes the smart part, literally. We train a machine learning model called a random forest regressor. If you've never heard of that before, don't worry. Think of it like a digital brain made of many smaller decision trees. Each tree looks at past price data, volume, RSI, MACD, and moving averages to make a small prediction. Then, all those little trees vote together to decide what's most likely to happen next. The model learns patterns like, when RSI and volume rise together, price often goes up. When MACD crosses down and order books thin out, price often drops. So it gives us a prediction score, how confident it is that the next move will be bullish or bearish. It's not magic or fortune-telling. It's just statistics applied to past patterns. Part 5. Technical levels. Where price likes to rest. Price doesn't move in straight lines, it moves in waves. So, the analyzer also identifies support and resistance zones, the places where price has bounced before. It scans recent highs and lows, counts how many times price reacted there, and ranks the levels by strength. When you combine this with liquidity and flow data, you start to see why certain levels matter, not just that they do. For example, if a strong order wall appears right at a resistance zone, it means big sellers are defending that level. If multiple supports line up with a bullish ML prediction, it might be a smart buy zone. Part 6. Generating trading signals. When everything aligns, now all the pieces come together. The system compares every part. Liquidity balance, order wall positions, machine learning forecast, market flow direction, technical levels. If they all point in the same direction, the analyzer generates a trading signal. For example, BTC/USDT, bullish signal. Confidence 78%, institutional buying detected. Or ETH/USDT, bearish signal. Confidence 65%, strong sell walls forming. These signals aren't random. They're the result of many small confirmations stacked together. This makes it more reliable than using just one indicator or one time frame. Part 7. Institutional report. A bird's eye view. At the end of the run, the analyzer prints a detailed summary for every coin it tracks. It includes market sentiment, bullish, bearish, or neutral, key support and resistance levels, predicted bias, liquidity heat zones, confidence levels. You can think of this like a mini institutional research report, except it's generated automatically by code. It gives a quick, clear view of where money is flowing and what kind of move the market is setting up for. Trader's Edge. Why this system matters. So why build something like this? Because trading today isn't just about charts. It's about data intelligence. Markets are moved by big players, bots, and algorithms that react faster than humans ever could. This analyzer gives traders a way to see what those bots see. The hidden liquidity, the silent accumulation, the invisible walls, and make smarter decisions. It's not a get-rich-quick tool. It's a research system, a foundation for creating automated strategies, dashboards, and even AI-driven trade execution models. If you're serious about understanding crypto markets from a professional, quantitative angle, make sure to subscribe. Like the video if you learned something new, and drop a comment. I will share a link of the strategy so you can run it yourself online without downloading anything. It works on Google Colab Cloud Network. Test it yourself and share your thoughts. Let's keep building smarter trading tools.